Welcome to Own Your Zone podcast, where we feature venture capitalists, innovators, angels, and other investors who create positive impact globally. Now, let's get started with the show.
Hi, I'm JiNan, Glasgow, George, patent attorney and founder of Neo IP, a law firm helping clients maximize their return on investment in patent assets. I'm also host of this show where we feature venture capitalists, private equity funds, angels, and innovators. This episode is brought to you by Neo IP, where we help companies increase their valuation and protect their business through strategic intellectual property protection. We provide IP legal services to help companies develop strategic patent portfolios and monetize their IP assets. We help innovators impact society for good by transforming ideas into valuable assets and connecting the innovators to the resources they need. I'm so excited today to have Allison Baum Gates with me of SemperVirens Venture Capital. Welcome, Allison.
Hi, great to be here.
Thanks so much for joining us. Tell us a little bit about your fund. You are in particular over the workforce tech, but you also invest in fintech, healthcare tech. Please explain a little more about your fund.
SemperVirens is an early stage fund focused on B2B businesses in healthcare technology, financial technology, and workforce technology. Our platform is connected to end buyers of this technology. So our fundamental thesis is that the relationship between employers and employees is changing. And we run a community of senior HR leaders at publicly traded companies. And we also work closely with health plans, insurance carriers, and health systems that tend to be the end buyers of the technology that we're investing in. So a big part of our investment process across both sort of accessing great investments, analyzing them in real time, and adding value to what we've invested is tied to this relationship with these end buyers. So we can ask questions like, what does your budget look like? What are you spending that budget on? What is your number one priority? How are you expanding budget lines over time? We are able to get insight into what I like to call not only the future of work, but also the now of work based on the people that kind of hold the key to millions of employee lives in the US.
That's so fascinating. And of course, the future of work is changing every day. And technology is a big part of that. I'm sure that you field questions every day about AI. Is it replacing jobs? Is it helping? Do you have a couple thoughts up front on AI?
We are big believers that what's happening in AI right now equates to somewhat of an iPhone moment. In that the capabilities of generative AI absolutely change the game for what kind of role it can play in making us more efficient, taking the work we don't really like to do off of our plate, but also changing the landscape, only further accelerating the change in that relationship between employers and employees. There are lots of jobs that will be eliminated as a result of the current capabilities in AI. And maybe we had thought, okay, these jobs might go away in 20 or 30 years, but it might actually be sooner than that. And so we believe there's really implications. Right now, a lot of the employers that we work with, we invest in highly regulated industries, whether it's labor relations, healthcare, or finance. And so there's a lot of excitement around AI, but also a lot of hesitancy around, data privacy and how do you actually build models that can train effectively when there are serious considerations around what kind of data they can use. So that's a big question. And then also, obviously, the ethical implications. So it remains to be seen exactly what the timeline will be, and more importantly, what the business model will be. I think for a lot of the AI that's being generated or created now, but no question in my mind that it is absolutely revolutionary. And we're all just better buckle up.
Absolutely. Absolutely. It's good to hear your point of view on that. Obviously, besides jobs being eliminated, we're seeing new jobs being created.
Mhm.
Obviously, prompt writers was never a position before, and people deploying the AI and guiding it. And I think it's fascinating. I think there's opportunity even where it seems like there's problem. In all of the areas where you're investing, of course, cybersecurity, another issue, as well as privacy. What are your thoughts on AI helping with cybersecurity, or even just what you look for in all of your companies for cybersecurity?
We tend to believe that most of the companies in our spaces that we're investing in need to sell into large enterprise customers in order to scale to venture type returns. So a big part of our diligence process is making sure that they have the guardrails in place to be able to effectively work with, the Fortune 100 in the US. And part of what we can do, even if a company is very early stage, is connect them with those buyers so that entrepreneurs understand what kind of requirements their customers will place upon them when it comes to security.
Mm-hmm.
Certainly, early stage companies not always equipped to deliver on that from day one, but we try to add value by making sure that it's on their radar so they understand what needs to be in place to be able to effectively be compliant with those requirements. So
I love how you're connecting the early stage companies into the Fortune 100, into those. That's often the biggest chasm to cross, right? That's a big lift that you're giving. Have you run into any obstacles or hurdles as you've done that?
Lots of them. I mean, I think, there's always this question of where are we in the timeline of, evolution versus revolution in the employer-employee relationship. And there are a lot of companies in our portfolio and that we, run diligence processes on that might be a little bit too far along the spectrum in terms of revolution. And so one of the biggest obstacles we face is investing or meeting disruptive entrepreneurs and innovators that then meet these people that, are executives at very influential businesses and have a lot of power, and to kind of, if you don't know how to manage that conversation in the right way, it can be very controversial to say, I'm going to eliminate your job or I'm going to change the way your entire business works. So that's certainly one of the obstacles in place. I also think, it's sort of like you can't teach a 5-year-old to do taxes. There's a time and a place for understanding how to work with these large enterprises. And it's important to put some of these requirements on the radar of, for entrepreneurs. But I think they also have to understand that they can't really address them from day one. And sometimes you have to crawl before you can walk, before you can run. And that means working with smaller businesses that might be a little bit more agile and willing to deal with failure, or, not quite as stringent when it comes to certain regulatory requirements. And that enables you to start building a sustainable business. I've seen a lot of companies go to very large enterprises too early. And what can happen is they end up building a very highly customized product for one large customer that doesn't scale to others, or they just collapse under the weight of kind of the bureaucracy of working at a big company, where even if you're able to get your foot in the door and run a pilot, it can take years before that converts to a large scale rollout. And if you don't have the resources to service other customers as well, it will be very difficult to raise funding when you only have, one customer with that type of risk. And so I think a lot of founders make that mistake of almost going large enterprise too early and then getting stuck in the sales cycle and not being able to demonstrate the traction necessary to earn additional funding.
I imagine that you are encountering that probably with every one of your portfolio companies at some point or another. That door opening that you're doing is so valuable. Thanks for doing that. That's a heavy lift if you're just on your own as a small entity. One role that we see often for VCs is that they're identifying blind spots that early stage company founders have. Talk a little bit about that and how you see yourself in just putting a spotlight into a place where the founder's management team didn't see it.
A big piece of that puzzle for us as VCs is often around fundraising. In healthcare and workforce technology and fintech specifically, we look for what we call founder market fit. So we tend to really favor founders that understand deeply the customers they're selling to. They understand deeply how these industries work, and they have experience with the problem that they're solving. Mm-hmm. So while there are certainly things we can illuminate for them from a market perspective, we would definitely favor founders that don't need that as much from us, if that makes sense.
Okay.
But what I think I'm finding, especially in the current environment, that the biggest place we can be helpful is around the fundraising environment, and we look at 1,000 deals a year. If you're a founder, you're dealing with one, and that's your own company. And so being able to pattern match and bring together, I think we're certainly at a time in the market where people don't know how to value growth. If we think about sort of the metrics that we used a year ago, 2 years ago, 3 years ago, in terms of, multiples on revenue, step ups from previous rounds, all of those things are completely out the window, and everybody's trying to figure out like what's normal. And I think we have a lot more data points that we can triangulate than founders do. And so being able to kind of say, hey, probably best if you start fundraising now, or don't raise now because nobody will invest, or you won't get the valuation you want, or whatever it may be. I think that's where VCs generally can add a lot of value.
Yeah, that's a great gift. And as you mentioned, you have data. You actually have quite a lot of data as assets, even in your fund, just because of the context that you have with the enterprise customers, and as you're interviewing them and understanding their needs. What are your views on data evaluation for companies that are early stage?
Data is certainly an asset. I have found that it can be difficult to monetize if there isn't a clear precedent for how to value it. So I think, I remember when I first started investing 10 years ago, there was this concept of data is the new oil, and that, no matter what you do, you're accruing data and that will be valuable. And I haven't really seen that play out. In terms of M&A or full value. I think VCs value the concept, but certainly now where data is so abundant that just because you have it doesn't necessarily mean somebody else doesn't.
Yeah.
And so, are people willing to pay for that, or does it give you a significant competitive edge when it comes to training your models? Or
Yes.
You have to be able to articulate that next step of how does this data actually accrue value over time in a really explicit way.
Yes.
So I think that's new, relatively new, newer than it was 10 years ago.
Yeah, for sure. Well, you mentioned getting your start there 10 years ago. You've written a book recently, Breaking into Venture Capital. So let's go to your origin in venture and talk about your book. What caused you to write it? What inspired you?
I wrote this book because I really wanted it to exist. And I got into venture just like everybody else, somewhat by accident. I was, started my career in finance, was an early employee at a venture-backed startup, and then ended up starting a fund with a partner. And as we started this fund, I was living in Hong Kong at the time, and kind of was learning as I went along in terms of how venture works and triangulating what investors care about and how to scale the business model of investing.
Yes.
And as I looked around, I consumed every piece of content that I possibly could. I reached out to try to build mentorships. I tried to connect with other people in venture. But I really struggled to find examples of women in particular who had broken into venture and built successful careers as investors. And so for me, the book was about trying to fill that gap, and share my story of taking a somewhat unconventional road into venture and kind of figuring these things out as I went along. So hopefully shortening that pathway for other people that might come from non-traditional backgrounds, but also interviewed other general partners from, I would say, underrepresented backgrounds in venture capital and technology more broadly. And I did not interview them about that being their background, but more about their success in venture and what has worked for them, to highlight these, the fact that there are a multitude of pathways to get into venture capital. And there are so many people that never become investors or they never become founders because they just assume that that pathway won't be productive for them. And I want to eliminate that, at least as a preconceived notion, for a reason not to get into the industry, because we do need more types of people in venture. We need more types of people starting businesses, and we need more types of people around the table talking about how to scale those businesses, because technology is changing all of our lives.
Yes.
And so we really need different types of people representing different types of lives that will be impacted if we want to really consider every perspective when it comes to, how these things scale.
Yeah, the different point of view, even as we were just talking about blind spots, the different point of view will help eliminate those. And certainly, I think, be more creative and perhaps exceptional, extraordinary even, and give the returns that you're looking for. I know one of my angles into venture was relating to intellectual property. I began with doing some direct investment in clients as an angel and understanding how to help them position their intellectual property assets to drive their growth, to provide with the competitive exclusive rights, and increase, obviously, their likelihood of success if they can execute on the plan. Talk a little bit about your experience with IP. Every area that you're looking at in this platform involves software, but we see in 2022 at the US Patent Office, about 65% of all patents that were awarded had some software relatedness. They were software related inventions. So what are you seeing across healthcare, tech, the fintech, financial tech, and also workforce tech with regards to IP?
I mean, IP is certainly a big part of every innovation. And I think you're really smart to try to encourage founders to think proactively about that. And I think what's really cool is when most people hear IP, they think of like deep tech innovation, like, quantum computing and these like really far out there. But there's a lot of IP around, process and other elements of the word technology doesn't have to mean computers. It actually just means, a systematic way of doing something. And so I think it's helpful to teach founders to think outside the box on what might qualify as IP and what really is unique about what they're building.
Yeah, and how to leverage that for the business by participating in intellectual property systems. With software, we often run into the point of view that it's open source, there's no IP. But in fact, open source is very rigorous copyright positioning, and all of the contracts around your contributions all relate to the importance of the intellectual property. And when we look at big tech, if you will, we see big tech, deep tech, all software companies that we use as household names in the public markets. We note that they are all filing patent applications at higher rates than in most years in the past. So we think every company deploying some software, some system, some technology should think about, at least ask the question, is it patentable? And how would that benefit the business? For sure. What are some other things that you're looking ahead to? A lot of times, as we think of venture capital, we are thinking about future solutions. Obviously, you mentioned the future of work, the future of healthcare, the future of finance. What are some things that really excite you about the future? And maybe one thing that scares you?
I get really excited about the fact that people have more choices than ever before when it comes to our finances, how we make a living, how we build our career, and how we address our health. And that's really what we're investing in is, helping create more better choices for different types of people. And then also implementing infrastructure to help them connect with and take advantage of those choices. And that makes me really excited. I think to me, the future of work, the future of healthcare, the future of finance is about personalization scale. And so I get really excited about that. But it also scares me because I don't believe that our existing systems were built for that level of diversity when it comes to choice. And our systems weren't built for the level of what I call, I guess, dynamism. Today, if you just look at the last 3 years, how many dramatic ups and downs we've had in the labor market, in our health, in the broader economy. And so we really need to build better systems that can handle that level of change, that speed of change, and that level of diversity as well.
And even the point of view with wearables and the data that comes from that is very personal and has the ability to create personalized, proactive good health and wellness solutions. Healthcare traditionally and all the infrastructure has been for illness treating, for disease treating, not avoiding them in the first place. Do you imagine there'll be change in that area anytime soon?
Preventative care is extremely powerful. I believe that the healthcare system that we have established today does not properly incentivize preventative care. So it ultimately comes down to us as individuals to make that investment in ourselves. And in order to encourage that kind of behavior, we need better education, we need better incentives. And so that's where I think there can be a lot of room for innovation.
Yeah, definitely. Well, Allison, we really appreciate all that you're doing, especially at the early stage investment here, and to encourage founders to position to scale and to overcome those obstacles. Certainly all the work that your fund is doing at SemperVirens. We certainly look forward to many people learning about breaking into venture capital with your book, Allison.
Thank you.
Tell me, where can people find you online?
You can find me at AllisonBaumGates.com, and Breaking into Venture is available on all major platforms in all formats, hardcover, ebook, audiobook. So please go read it and let me know what you think.
Fantastic. It's been such a pleasure to have you on. Thank you, Allison.
Thanks so much.
Thank you for listening to the Own Your Zone podcast. We'll see you again next time, and be sure to click subscribe to get future episodes.